two that we just profiled, Meta Platforms and Salesforce.com, both of which told us that business is robust and the street wasn't looking for that. It's perhaps much more robust than Wall Street believes. The analysts didn't know. I hope you saw me in the metaverse. I was jacked as all get out. You know, like jacked? Well, it was my avatar, actually. Anyway.
I'll tell you what he's doing there. And we talk about Salesforce versus Carp. Goldman's price targets and what they actually own, and maybe that's why they're putting out the price target that they have, and also Bank of America's price target. That's what we're going to look at here.
So storm, if it comes in hard and we have a bigger headwind on the economy, that certainly can hurt.
A lot of competition. They have Microsoft Teams, they have Salesforce and Slack. They have other companies that can do video conferencing. If you're going to charge $30 per month per user on average, that means that your pricing is pretty high.
It's been about a year since the transaction with Salesforce.
Yeah.
In terms of uptake for Slack services and just more broadly, companies making new contracts for Slack or more broadly with Salesforce, are you seeing any kind of hesitation given what's happening in the marketplace? So many other big tech companies, even small tech companies, are pushing back in terms of labor, workforce, et cetera.
I think there's sometimes a few more like procedural hurdles to.
Expected to grow revenue like 40-50% for many years to come. Shopify or Salesforce, fantastic company, finally getting cheap again with 20% expected revenue growth. Shopify. Again, this is where it's like, okay, Salesforce EV to revenue is 5, Shopify is 5.6, Salesforce is expected to grow 20% this year, Shopify 26%. Which one's a better buy? I don't know exactly. I would probably lean towards, this is where it's like I might eventually want some e-commerce exposure and do, small positions in Mercado Libre and Shopify.
It is time to take a look at Salesforce. Now, Salesforce is an interesting company because it has done remarkably well in the past. As we can see, I think they got listed in 2004. Yes, that is right. And as we can see, basically went 43x. Now, lately it has come down. Okay, so as we can see here, it was about $300 a share. Right now, almost cut in half, right? And so together with you. So without further ado, let's take a look at Salesforce. Now, as we can see, this is how the income statement of Salesforce looks like. The first thing you see is just resilience and excellence, basically, right? Look at this revenue growth here. So stable, right?
Salesforce, they all look wonderful, but they're just not there yet. Until the trend changes back up, Brian, we'll just sit and be patient. And, with us being 65% in cash, and we get a little 10, 15% drop in the indexes, it's not going to hurt our feelings that much. But you look at like NVIDIA, AMD, Salesforce, just to name those three right there, their balance sheets are strong. They're making good money. It's just you're fighting an upward trend here, which is going to be kind of brutal even for a great stock. But they're wonderful stocks. Are we going to be buying them when the market turns? We absolutely are.
From 08, 09, what we saw when Salesforce was a high-risk, high-growth company that was not generating profits, it was one of the first names to see a sell-off in the names, but it was also one of the first software names to actually rebound. Salesforce in 08, 09 actually went up on the first number cut there. And a year later, when growth troughed, the stock was actually double from where it was when it first cut numbers. So there is a lag. The market overreacts here on the upside. These were names that were overvalued. We overshot the upside.
4 to 10 months before the rest of the market, Brent. So Salesforce has now returned 4,000% in 20 years. What are a couple of names that you think have that kind of upside potential in your coverage space?
So we think it's really important to be selective. We've actually outlined 4 different routes that have different risk characteristics. If you want to play it safe route, we also like Salesforce again here with the sell-off. It looks pretty compelling. It's
a multiple of 30 times estimated pre-tax earnings on 2022. Salesforce, which is growing more slowly than AWS, trades at roughly 30 times pre-tax earnings. Ultimately, he comes up with the valuation of $1.7 trillion.
Change was last earnings season when Salesforce reported a good quarter in late May, but lowered its full-year sales forecast, blaming exchange rate fluctuations. 2 days later, Microsoft cut its quarterly guidance, citing the same issue, and based on tonight's report, they might not have cut it enough. Currency is inherently confusing. Fast forward to last week.
Or Snowflake, we do see some risk that some of these issues that impacted Microsoft ServiceNow could cause some issues and drive a reset to their outlook.
Even if you exclude Slack, which last year it's still been like 3%. So that's every one of these cells.
Our Brett Taylor.
Yes.
Co-CEO of Salesforce, but chairman.
Correct. Co-CEO of Salesforce, chairman of Twitter, who is at the center of dealing with Mr. Musk and his.
And you'd probably like to end this before Dreamforce, but you can't do that. So, David, is this good or bad if you're Twitter that the Tesla stock keeps going higher?
I think it's
play. They have a relationship with Salesforce.com. So there's places, I think, Dom, that you could add to. I just don't know. I don't want to traffic in where everybody is trafficking in. That tends to be kind of the FANG names. I own Meta. Unfortunately, that's been the dog, but that's the only one I'm playing at this point.
Jason Snipe, the big...
Two of our travel trust names report, NVIDIA and Salesforce. Now, NVIDIA is a very high-end semiconductor company. They pre-announced a miss not that long ago versus an already lowered forecast. The same thing could happen again. Rough time for these kinds of chips. I think Salesforce will complain about the strong dollar again, but don't forget that it does a ton of business at Dreamforce, and that conference is back in person this September at the same time as the NFL starts. So I will miss the first home game for the first time in 40 years. There are lots of it's Eagles. They're soft. At NVIDIA, we find out why we sold Salesforce and Apple and Netflix when Jay Powell speaks. He's all that seems to matter. Okay, the bottom line, until Jackson Hole, we have to play a guessing game about why these stocks are going down. And for the moment, the answer is basically no. Two of our charitable trust names report, NVIDIA and Salesforce. Now, NVIDIA is a very high-end semiconductor company. They pre-announced a miss not that long ago versus an already lowered forecast. The same thing could happen again. Rough time for these kinds of chips. I think Salesforce will complain about the strong dollar again, but don't forget that it does a ton of business at Dreamforce, and that conference is back in person this September at the same time as the NFL starts. So I will miss the first home game for the first time in 40 years. There are lots of it's Eagles. There are lots of
already been pre-released. We'll get Macy's, Nordstrom, Dell, Salesforce, and Peloton. And in my opinion, the longer we spend under 318 for the QQQ is a perfect buying opportunity, not only for the programs of building your wealth, no, but for actually, in my opinion, getting great deals on stocks.
Now, we do have tonight's Salesforce.
Oh, yes, Snowflake,
and the whole software group has just been under a lot of pressure for a long time.
The biggest one of all, though, tonight,
we have NVIDIA. Now, NVIDIA is so problematic because...
Okay, just to remind everybody, too, Salesforce, a Dow stock is imminent. Snowflake is a very important stock for the cloud universe, the enterprise spend as well. We're waiting on those numbers to cross. Reporters standing by to pop on the minute that all of that happens. So all that said, Josh, and NVIDIA is going to be in just a little bit. Past week alone, NVIDIA's down 7. What's your initial comment here on the reaction to the quarter and the stock move?
Here in your great 1 o'clock, 12 to 1, right near the end, I said, Salesforce is going to report, the stock's going to be down 10, and people aren't even going to listen to what Mark has to say. I've seen this happen a million times, and invariably, when it's down 10, he puts on a pretty good show, and there's got a nice buyback. He explains the guide.
In these stocks today, after, in overtime, NVIDIA, Salesforce, Snowflake was an opportunity to buy it, and you weren't a table pounder just because the environment is what it is.
I mean, Snowflake's down a great deal, and I think Snowflake won a lot of big business. Now, Mark can talk about L'Oreal. He won that. He got a really good VA video that I saw that's going to matter a great deal. Everybody wants to move first. And it's not like Salesforce is up a lot this year.
Report that they just released a couple minutes ago, and the stock is actually selling off after this earnings report release. It's down 7.25%. Now, this can be caused by a variety of reasons, and what I want to do in this video is I want to go over why the stock is selling down after hours. I want to look at earnings reports of companies that I own, which Salesforce is one of them. I have it in the story fund here. It's a $5,300 holding. I'm going to be down 6% on this one tomorrow if the after hours trading sticks. But one of the things I like to do with a stock like Salesforce that sells off after hours is I try to imagine that I can't see the stock price today. If I can't...
He's got a problem with the dollar, But remember, their first quarter is larger than SAP. L'Oreal's using Slack. I think we have to focus on Slack doing well.
SAP, another company that said you can't outrun the move in currency.
Right. And I think that what we have to June's lows. I mean, even tonight we had weak numbers from Salesforce.com, and they were weak, and weak numbers from NVIDIA, and they were weak. There's plenty of reason to be apprehensive, but I'm betting the market will bend, not break, through a rough September. And when we get through that period, that June low will hold. Now, it won't be easy because we got a bunch of new negative factors.
We'll get more tech earnings. NVIDIA, the chip maker, as well as Salesforce will both be reporting. And some U.S. economic data is expected, including durable goods orders and pending home sales. Of course, Greedy, we have seen a real softness in the housing data as of late.
And certainly something we're going to keep an eye on as we start to hear just from a lot of the Fed regional governors.
A little more than 3%. Also lower after results is Salesforce. Its guidance also disappointing. It trimmed its revenue forecast for the full year, shows that maybe businesses are pulling back on spending on business software in a softer economic environment. That stock definitely softer this morning, down about 6.6%. What's interesting, though, is apparently business
which kind of reminds us a little bit of what we heard last night from Salesforce. We talked about it a little bit, a little measured buying activity. I mean, you want to pay attention to companies like this. Dell is a company that does $100 billion in sales. They are a great barometer on enterprise demand. Same thing for Salesforce. Last night, $30 billion in sales. So those sorts of cautionary comments are important. The flip side of that is a company like Workday. It was actually had some positive things to say, but it's really important. We spent some time talking about Snowflake. Snowflake is a company that does
Intuit, ServiceNow, Adobe. I think Salesforce is the second biggest. Microsoft might be the first. But I just think that it's a good ballast against some of the, Google's my biggest position. I think of that as value tech. And I want to stay short this for as long as I think the Fed is in hawkish mode.
Guy, are you in agreement?
Listen, his characterization was interesting, and you're right. It would have been interesting to have gotten it a bit sooner in terms of even when he said, Jim, that he's met with hundreds of CEOs and economists and business leaders, other experts,
But I will tell you that as among NVIDIA and Salesforce, I buy Snowflake.
Well, the one name that will open higher of those 20%. We'll talk Snow in a moment. Really quick on Salesforce, Forex is a big piece of it.
Yes.
They did raise their guidance on headwinds from 600 to 800 million, and actually Benioff talked about that with Jim as well.
90 days ago when I said, we had a great quarter, but the dollar had a better quarter because I was in Japan and I
is CR give you an idea of the 5 main ones we had.
On the Dow today on the back of its earnings and guidance cut. Farmer Jim, he owns the stock. He joins us now because he's buying more. So you just got off a plane and you couldn't wait to tell us that you're buying more Salesforce. Why?
Hey, you guys wanted to know. Listen, with the multiple, but it's a fabulous company. Okay, we use Salesforce. A lot of people use Salesforce, and the way they pervade and get into every system and every nook and cranny of your business is pretty incredible. But I think what's probably more important is what we're looking at for growth here is mid to high teens revenue growth for the next quarter and into next year. And that's not only good for Salesforce, it sort of bodes well for enterprise spending. So it's small because of the multiple. It's a little bit over 2%. A normal position for me is going to be around 4%. But I also think, Scott, they've lowered the bar. They've lowered the bar, and I think they've lowered it to a level that they will easily clear.
Yes. We'll see you back soon. What do you think of Salesforce in the quarter? You own it?
Yep, I do own it.
Okay. How about this move?
I think it's a good move for Jim to make. We've owned it for a while. We bought more of it when it fell over the last 12 months. But the reason that we think that it's still a stock to own is the following. If you looked at just their extent, because they really perhaps didn't see it. So what Salesforce has seen is something that other companies have seen. They've just admitted it, and they've taken numbers.
Any sort of a profit warning or sales warning. We saw this with Salesforce last night, that stock getting hit really hard. We saw that with a lot of the retailers, if you think back to Macy's or Nordstrom or anybody else this week, even when they're talking about a relatively more modest outlook in terms of sales or something, they get punished pretty hard. Salesforce, big company, it's down 6.5%.
Right, and they are, because there is that nervousness. We haven't been in this kind of environment. We haven't had a CPI read over 2.5% in 25 years. So we don't know how long and how hard the Fed is going to have to move in order to.
I think we could test June's lows. I mean, even tonight we had weak numbers from Salesforce.com, and they were weak, and weak numbers from NVIDIA, and they were weak. There's plenty of reason to be apprehensive, but I'm betting the market will bend, not break, through a rough September, and when we get through that period, that June low will hold. Now, it won't be easy because we got a bunch of new negative factors. I think it will hold
numbers because those came out on August 24th, which as of the a lot of companies seeing their earnings growth really contract. Salesforce, at least in this quarter, holding up, because that is not the full story, though. We did get Q3 guidance as well. We're expecting revenues between 7.8 up to really $7.82 billion. That would be a growth rate of about 14%.
Salesforce, I got three of them, actually.
Oh, okay.
But let's look. Here we go. They're all the same time frame, so it's just different lines, different ways to draw the line. So we know that Salesforce balanced with the market, but the problem is it's only 1% above its 52-week low. It would take the S&P an 8% drop to get to its 52-week low, the NASDAQ a 10% drop. We're hovering ominously right at prior lows. Another way to draw the line, second iteration. You can see it here on your screen. Or third iteration.
In terms of spending, then that makes sense that Salesforce would break.
And that's been Karen Feinerman's theme. I know you know this. I mean, that's how she's sort of been hedging some of her long positions vis-a-vis exactly that. And I'm with Carter on this one. I mean, if you recall when he put that Apple call out, I was on the phone doing hedging strategies with.
Buy one of the stocks over the other, it'd probably be Google. But I do like Salesforce's long-term investment. If you watch my top 20 cloud stocks, you know that this was on that list. And I do
caution. We heard the caution from Salesforce and others.
But they were so much earlier, Nancy, right? And you did see cloud growth decelerate, and now these are all of their customers.
Yeah, no, you're right. And I think you will see continued deceleration. But let's harken back to 2019 when we had 3%.
And that's where a lot of high multiple stocks sit in the software space. So that's one area where we've got a lot of shorts, a lot of the cloud-oriented software.
Talking about the company's success with enterprise apps, Jim, there's a lot to get to on CRM and just about Dreamforce in general. Front page of the Chronicle in San Francisco this morning is about the $40 million that the conference is bringing back to a.
If you use WhatsApp, we have a Salesforce infrastructure that can use WhatsApp in the same way that they use Slack. Slack is really taking off, doing very, very well. Mark has said that over and over again. I have Brett Taylor today, the co-CEO. I think Slack is a major focus. I think that they're taking share from Microsoft. They feel very emboldened and get big orders. So I think the answer is the multiple's too high for Salesforce. I've liked the company since 2008, but I recognize that spike that you saw was over-enthusiasm, and the decline to the right was when Jay Powell decided to get tough. But, David, there's no doubt in my mind people just think that every tech stock is overvalued. Bear with me. At the conclusion of 4 brutal days that coincided with Salesforce's Dreamforce Festival, the Dow sinking 107 points, the S&P losing 0.84%, and the stupid NASDAQ tumbling another 1.37%. What have we learned here? All right, let me go over my findings and put them in the context of events away from tech. First, I made a point of asking everyone, I mean everyone, whether they were having. The best ones have the ability to reinvent themselves on the fly. Salesforce.com, the host of Dreamforce, is probably the best example. For the longest time, Salesforce grew, often aided by expensive acquisitions that only did pay off. Yesterday, though, co-CEO Brett Taylor told me that the focus was profitable growth and returning capital to shareholders. Holy cow! The company raised its growth forecast, reiterated its target of $50 billion in revenue. If you've been selling the stock of Salesforce, it tells me, hey, maybe you want to rethink what could be an ill-advised strategy. Look, we are in a tough moment. I have not denied that from day one. As I've said multiple times, although almost no one seems to believe me, the Fed wants the price of all assets down, including your homes and your portfolios. Jay Powell can only do that. That's how powerful this is, and it may replace a lot of what we see and hear about us. But we're going to have to be in every show is going to have to be in. Sure, well, first, this big pivot for Salesforce. They're always talking about growth. Now they're talking about profitable growth. They're talking about a big target for revenue, but they're also saying, listen, shareholders, you're going to get capital. That has not been Salesforce's way. They had just been buying company after buying company after buying company. I pulled a switcheroo on Mr. Taylor. What I said was, look, I can talk about Twitter because I didn't want him to say I can't talk about Twitter. But he actually, I think he made you feel that everybody, I think in his team at Salesforce, not his team at Twitter, is that Elon Musk is about to be handed one of the great pieces of real estate, which is Twitter, and Twitter may be actually doing well.
Also announced that WhatsApp and Salesforce integration to let business chat with customers. Now, I believe Meta made some kind of acquisition in this space where they were trying to layer on some kind of a CRM or customer relationship management software.
We may not have hit bottom on these, but I feel like you're getting in at very good PE multiples right now for these businesses. And, you know, I kind of use these opportunities to just build a larger position, and I hold
the U.S. markets. I'm not going to ask you.
Be talking about momentarily, and that is Salesforce. Mr. Smith also taking what I'm told is significant stake in that company. Of course, it's a huge market cap, and so it would be well below any reporting stake. But nonetheless, when an activist of his type takes a position in a company like Salesforce, it is perhaps noteworthy and even newsworthy. During his presentation, Mr. Smith is expected to focus on a number of areas he thinks could be improved at the company, while, of course, complementing its management and its trajectory over a long period of time. He does say driving higher incremental margins is in those shares is largely the result of Salesforce's subpar mix of growth and profitability, pointing out it's not generated what he says is meaningful operating leverage relative to peers in recent years, and points out, at least in his opinion, that its targets, its long-term targets, are less ambitious than peers. So all of those going to be part of the presentation. Mr. Smith did want to let people know again. Now, you know, how do you get active in Salesforce in a meaningful way, or does that presage the possibility of it? These days, as you well know, Andrew, you know, a lot of people call themselves activists. There's a lot of activism, but most of it does not result in proxy fights or battles for boards. It just results in a lot of conversation and quiet pressure. But certainly that would seem to be what's going on here with Mr. Smith and Salesforce. Back to you.
When we talk about pressure, what is it exactly that is it just this is a long bet he thinks there's a lot of value there, or there's actually real things that he thinks need to change in a substantial way that he's going to actually be pushing for?
I think when it comes, Andrew.
It's just worth pointing out, Salesforce is a Dow component. We are now talking about the Dow indicated up by almost 650 points. That's a gain of 7% for Salesforce, and that, again, adds significantly to the Dow. So this is something the market is paying very close attention to as you're reporting this, David.
Yeah, of course, you got co-CEOs there. Mark Benioff, of course, the man who created the company, founded it. There's been a good deal of organic growth.
And profitable company if it were to be traded on the NASDAQ like a Salesforce or a Workday. So if we look at them from that perspective, you know, there are assets in this ecosystem that are fundamentally valuable.
Or tell us about some of the businesses you're invested in that are doing actual work with the blockchain.
We brought earlier Salesforce. I think Jeff Smith is actually presenting right now. We're just going to go with the 13D Monitor Conference. That's where we are. Forget this active passive stuff. It's just too much to say all at one time. But Smith's on the stage. You know, we talked Splunk yesterday, guys. We gave you the preview of what he's going to be saying about Salesforce, which I assume is in process, if not has already concluded at this point. Really focused there on margins. We're going to have an opportunity to sit down with him and discuss in a lot greater detail, Carl, the thoughts on Salesforce. You know, not a typical target, so to speak, for Starboard, given its enormous size. But again, Jim, focused on an opportunity they see in terms of margin improvement, even though for its part, you know, the company's already saying they've set what they say are ambitious targets for the future, including
instant reaction that there's too much fat at Salesforce. That Mark's maybe, you know, he hires whoever he wants to hire. They got the new building, whatever. I actually think that Brett Taylor and Mark together make it so that they've got a very disciplined operation. They had the best quarter of any enterprise software company that I follow. The best. There's about a half dozen companies in enterprise.
Focus on two of them, starting off with Salesforce, which obviously is a $150+ billion market cap company, adding a lot today as a result in part of your presentation. You say Salesforce has not generated meaningful operating leverage relative to peers in recent years. How should the investing public take that kind of a statement from you?
Right. So, David, great to be with you again. Happy we do this once a year.
Really like a terrific company, a company that I've admired, that we at Starboard have admired for years. What they've done is incredible. What Mark Benioff has built is truly incredible. When I'm inside companies, when I'm working with companies as a board member or talking with companies, inevitably they have Salesforce, they're using Salesforce, they're becoming a Salesforce partner. So Salesforce is ingrained in the fabric of so many companies and has become so important in the way that they operate and conduct business. So being able to invest in Salesforce for us is terrific. It's a great opportunity. We never expected to be able to have that opportunity. But given what's happened with market conditions, given what's happened with valuations in particular with Salesforce, it's given us an opportunity to be able to make this investment, and we're thrilled to be an investor in Salesforce.
Okay.
As it relates to margins, yes. What we're really talking about is a migration for them, and we've had a great conversations with them. It's a migration for them. As companies are growing really fast, especially in the recent
Starboard. Good relationship with Mark Benioff, by the way, the co-CEO of Salesforce, and they share a common goal, a higher stock price. It also helps that Benioff recently adopted a more hardline approach toward profitability. He cares about the earnings now, not pursuing growth at any cost. But what strikes me here is that all of this is irrelevant. Cheap price to earnings multiple, it's impossible for Salesforce to buck the trend more than a day or two before slipping right back down. That's the nature of this particular beast. You need stocks that can escape the clutches of oil, of interest rates, of the dollar, of inflation. And that's very hard. Hey, listen, take Netflix. They just reported, right? They reported magnificent pay for growth stocks. In fact, I did just that for Salesforce.com for years. And it was a big winner because we weren't worried about the Fed or the bond market or inflation, oil, PPI, CPI. We didn't have to run a horrible gauntlet for stocks to rally on good news. And stocks weren't pickleballs or rummy cubes.
Down more than 30% after we saw weak results from them. Salesforce taking a hit as a result there. Salesforce actually down for a fifth day in a row and hitting a new 52-week low today. And then Warner Brothers Discovery reported after the bell yesterday, shares down close to 13%. The company said that third quarter revenue missed expectations. Analysts see weak trends when it comes to TV advertising as a continuing headwind.
Advertising previously expected, causing deep declines in even blue chip cloud stocks like Salesforce and Palo Alto. High valuation names like Snowflake, forward PE over 500, falling harder than the broader group. But despite recession fears, cloud spending has remained stable in the second half of 2020. Important to note, as you can see here, it has fallen from first half levels, leaving the question which
the best consumer technology. Netflix owns streaming, Google owns search, Salesforce owns customer relations management, Workday, ServiceNow, digitized what the other guys didn't. They each had their own separate domain where they were untouchable. But then they all started going against each other. Microsoft's Azure goes up against Amazon Web Services.
Labor force by 13%, over 11,000 jobs. You've got Salesforce that has layoffs. You've got Amazon Prime, and even the financial sector, Credit Suisse. But the real telltale sign, it's the retail sector. So you've got Nordstrom, Gap, just to name a few, where they have layoffs, right before the biggest retail season of the year. So I think these
of employees this week as demand weakened in some countries for the software maker, becoming the latest in a growing list of tech companies to cut their workforce. This one caught Brian Sazzi's attention, and that's where we find his take today.
It caught my attention, Brad, because similar to Meta, normally their business lay off workers, but a source tells me Salesforce laid off, let's say, about 1,000 employees this week. And I can't say I'm too surprised. It has been a little slowing in the enterprise demand for various Salesforce products of late as the economy has slowed. And also, this is a company that has bought a lot of businesses in recent years. Slack, MuleSoft, Tableau. So there's a lot of employees inside of this company. Quick graphic here on why this might make sense for Salesforce in terms of why they're doing it now. Like I mentioned, they have bought a lot of businesses in recent years. There's probably some fat inside of the company. Enterprise demand has slowed a bit, as I just mentioned, and must gain more credit with the street on margins. And this comes at a time where the company, Starboard, I believe, recently took a stake inside of Salesforce, noting that there is potential for them to improve the margins in their business. Now, I did ask Salesforce co-CEO and founder Mark Benioff just a couple months ago at Dreamforce about the company's commitment to improving margins. Take a listen.
For us, I think that the market doesn't fully appreciate how committed we are to growth and margins. It's also why we have announced a new great.
Jefferies underscoring the potential for Salesforce to really close that gap in terms of operating margins versus others in the space. Now, they're not going to get there entirely by laying people off, but I think, as the business kicks back into warp speed overdrive, as we start to get out of this economic slowdown, plus some of these cost cuts and maybe more to come, you could start to see that gap starting to close for Salesforce. And my take is this on the company. Right moves at the right time for Salesforce. That's me and Brad in the cloud using our cloud software. Let's say it's from Salesforce.
History.
Icon. This is great.
I know.
I love it.
In more
How do they
places
draw
than I
these?
thought.
How do they draw these?
It's incredible. It's really good. He even has a good lineup, too. I like that.
I hate that you look younger than me.
I mean, well,
you are. You are.
But I think with all that we've seen in Salesforce, and in ERP names specifically, Salesforce is down, 53% from the November highs last year. Yeah. And it's been a tough road, but it's also the environment that we find them in right now, too. When you have this many companies that are saying that they're pulling back on their spending, and that's not just in headcount, that's in other areas of the business.
One-time costs, and their forward P's at like a 27, something like that, 27, 28. In a major way. And when it comes to Salesforce, this has been one of the most important stocks of the, let's call it 2009 through 2021 rally of the market, right? 14 years ago, this was a $7 stock. And as the economy got healthier and healthier over the years, and as business grew bigger and bigger, and companies had more and more success, I felt like Salesforce was always one of the most telling companies. Never a stock I personally owned, but I wish I owned it over all this time. It's done tremendous, right?
That with a note that says, according to Salesforce data, Apple Pay is growing at an extremely rapid pace, up 52% year over year, month to date in November globally, and 59% year over year in the U.S. Meanwhile, over that same period, PayPal adoption actually fell 8% globally and 4% here in the U.S. That said, PayPal remains a much larger payment type into PayPal's market share. The analyst said Salesforce holiday spending data strengthens his belief that PayPal will continue to face the steepest competition from Apple Pay in the coming months and years. Apple appears to be possibly seeing a bit of a bounce in the pre-market, up about 0.4%. It's down about 20% this year versus PayPal, which is down.
Darn big ones. As far as tomorrow goes, we got Snowflake reports in Salesforce. Those are big ones. Those are very, very important stocks to the market. We're going to see what they report. And then Ulta just hit a new a new all-time high, literally yesterday. And we'll see what they obviously report on Thursday. And also Kroger's a big one. Everybody's going to be looking at those.
In a second, I do want to point out to folks, Salesforce earnings are crossing the wire here. Just going to give you the top and bottom line numbers here. On a basis, it does look, at least with regards to the fiscal 3Q numbers, sales coming in at $1.7 billion. That's pretty much in line with what the street was looking for, and the company's sticking by its full-year revenue forecast.
We get from Okta, what we get from Snowflake, what we get from Salesforce, because the cloud area has been beaten down, Remain.
Yeah, Scarlett, I think other earnings crossing.
Yeah, Snowflake just came out, and we're looking at the stock falling in after hours trading after its third quarter revenue beat analyst estimates, but the fourth quarter revenue forecast is the issue here. 535 million to 540. Yeah. The consensus was 551.
Sorry, just need to go back here to Salesforce. We're now learning that Brett Taylor, the co-CEO over at Salesforce, is planning to step down. Just to be clear, Brett Taylor, we're learning right now, Salesforce vice chair and co-CEO, is stepping down. Remember, him and Mark Benioff had been sharing duties here, and there had been a lot of questions about whether you needed that co-CEO role, though I think, if I'm correct, some investors thought it would be Benioff that maybe would be riding off into the sunset, maybe reducing his workload.
I'm grateful for 6 fantastic years at Salesforce. Mark was my mentor well before I joined Salesforce, and the opportunity to partner with him to lead the most important software company in the world is career-defining.
In the morning, John Freeman, right now, joining us from CFRA, Vice President. Vice President of Equity Research. John, is it a redemption quarter for Salesforce and Cloud, or are we going to get coal in the stocking?
Well, okay. So if you are very hyper growth focused still, you shouldn't be. At least top line growth, right? You're gonna have, we definitely had a slowdown top line. There's no really way of getting around that. Particularly with Salesforce, you have a high, it's a highly recurring revenue source, right? So it's very sticky, but it doesn't change, a lot in one quarter. So it's hard to change the momentum, but you can on the bottom line. So I think consensus is around $1.22. I'm at $1.32, a little more optimistic, because I think that there's a lot of leverage, operating leverage that Salesforce, that Benioff can exert and drive profitability, even if you have a slower growth environment. We saw him do this. We've seen him do this, in smaller, slowdowns, economic slowdowns before. He kind of pulls the lever back on spending, and boom, they may not, surprise on the top. Cloud business, right? They have aggressively, Salesforce.com has spent aggressively on marketing and sales. It's not difficult for them to sort of pull back on that a little bit and show a little leg, show what they can do on the bottom line. And then in addition to that, you've got sort of ongoing consolidation. 5 nines. That, I think, that would be really synergistic with Salesforce Cloud, because all of those guys have now gone cloud. 5 nines and NICE, which has been around since the 80s. Now it's all pure cloud business, and they're doing very well in contact centers, which I think is very synergistic to outgoing call centers. It's synergistic both to the customer service side, which is a big part of Salesforce's revenue also.
All right, so with cuts already behind them to their guidance, basically, this stock cannot see that again, it seems like. We're down at the lows. There's not a lot of optimism that has shown up in the share price. So maybe the bar is lowered somewhat.
On the bottom line again, for the likes of Salesforce, ServiceNow, Datadog, I think the bottom line will impress, but they're probably not going to get a whole lot of multiple expansion unless there's a catalyst. And I think a Ukrainian victory in the war with Russia, which, according to a lot of military experts, might be imminent, at least before spring, or at least.
Equity research at CFRA, looking for Salesforce to get back into the 200s one step at a time. No sell-off tomorrow would certainly be a start after already cutting guidance once. John looking for at least the bottom line to show.
Thursday here in the U.S., a number of them related to earnings, including Salesforce, which reported after the bell yesterday. Disappointing outlook. Analysts saying that's really reflective of the softening macro environment. Plus, the co-CEO, Brett Taylor, is leaving the company, leaving just Mark Benioff at the helm. So that's a bit of a surprise. As a result, the stock down about 6.4%. Disappointing revenue outlooks. Salesforce, one of them, softer macro environment, likely to blame for that. Plus, the company's co-CEO, Brett Taylor, is leaving, so just Mark Benioff is going to be leading the charge. That stock is down 6.5%.
People had expected. You're seeing that in Snowflake and Salesforce, with both reporting worse than expected expectations. I find that really interesting, because this had been one area that people thought was a lesser bad than perhaps some of the other big tech names. Snowflake shares down nearly 6%, Salesforce down 7.4%. We almost named your dog there, Snowflake. I think that you would have a good, Snowflake. Credit Suisse shares also, we were talking about that earlier, down today in pre-market trading by more than 6% after 13 straight days of losing, the longest streak ever. Those shares are down more.
Correspondent, Earnings Wiz, thanks for being here as always. We're down at 149 right now, 150. Stock closed at 160, so we basically just gave up the day's second half rally in Salesforce. I don't think this would have anything to really do with some of the leadership shifts. Benioff's going to be chair and CEO. I know there's obviously other important people around him, but he is the face of this company. Why do you think we're unwinding this way?
Well, I think the report itself, earnings growth, and I think that's the challenge for Salesforce. But let's cut through the numbers first. If you look at the results on a per share basis, they beat the estimate by close to 19 cents at $1.40 versus $1.21, and that suggests earnings growth about 10% year over year compared to $1.27 last year. So they were expecting a contraction in earnings. I just think the earnings outlook for Salesforce prior to this report actually was rather tepid, at only around 7% earnings growth for the next 4 quarters, with sales growth around 18%. And this is much different than what we talked about yesterday with Workday. Now, these are, again, 2 companies that are in the software realm, especially when it comes
to business, which is higher. You've got Splunk up, but Salesforce is down, and Snowflake is getting creamed too. So, again, we've kind of got this split cloud market. Thanks, George. We got to run. Salesforce, the one we wanted to hit. We got it. Appreciate you. George Tillis with the breakdown of the earnings. Salesforce right now, back to where it was.
Time to start an investment or dollar cost average into Salesforce.com. We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. Time to talk about CRM. As you see here on the screen, we are recording this during the regular trade, but right now this stock is down over 10%. That's on the heels of being down over 42% over the a revenue standpoint. Now, what stands out?
Salesforce was the worst performer in the S&P 500, falling more than 8% despite an earnings beat. The company said co-CEO Brett Taylor would be stepping down. That announcement overshadowed the report, leading to what Wedbush securities analyst Dan Ives called a knee-jerk reaction in markets. And Costco fell.
Second largest company I cover. Largest one is actually Microsoft, which is one of the largest in the world. But yeah, no. When I think about Salesforce and the co-CEO structure, look, we've always kind of been believers that co-CEO is a really difficult thing to do, right? Unless it's a situation like Atlassian where the co-CEOs are co-founders, it's really tough, right? You need to have someone who's kind of the head making all the decisions. And so, we've seen twice now Salesforce try to do the co-CEO structure, first with Keith Block and now with Brett Taylor. And it just doesn't appear to have worked out long term. There's always the thought when these co-CEOs get announced that Mark is kind of going to happen in a downturn. Salesforce can definitely consolidate budget, right? I mean, they have so many different solutions across the sales and marketing and collaboration stack. And so they can get a lot more IT dollars over time, especially in a downturn where CIOs are looking to consolidate vendors and tighten belts. And it feels like Salesforce has a lot of room for margin expansion, a lot of room to improve their profitability, and it feels almost like a self-help story at this time. So I do think the stock is ownable, especially at sub 20 times free cash flow.
All right, Nishi, really good to catch up with you. Thank you so much. Appreciate it. RBC Capital Markets Managing Director.
How important this acquisition was.
Next up, Art, is Salesforce. Year to date, down some 37%. Is it a good opportunity to get in or a good opportunity to stay away?
I think it's probably a good opportunity to continue to avoid. So Salesforce CRM has missed its last quarterly numbers, and it's missed 2 out of its last 3 reports. And if that wasn't bad enough, their co-CEO Brett Taylor is stepping down, and co-CEO with Mark Benioff, who is returning. And one of the things that people really like Brett Taylor for, a pretty good job of aligning CRMs or Salesforce's operations and optimizing things, is that we're going to go back to that Mark Benioff, let's make some big acquisitions and see how long it takes to get them online. So yeah. I think that they've got at least a full year of underperformance.
Mike Sievert did a big deal with Salesforce. Not that anybody cares. Not that anybody cares.